Greetings and thank you for joining us at FutureMoneyTrends.com. I'm here with Scott Pastel. He's the Director of Marketing of the Reddick Network, Reddick Real Estate Network. I've been following the Reddick Network for some time now. I've actually even purchased property through them. It's a group I know, I trust, and it's all about the people when making any investment, whether you're buying a stock, a piece of property, or doing a private investment fund. It's all about the people. So Scott, thank you so much for joining us.
You're welcome, Daniel. It's great to be here.
Scott, I want to start off with just the state of the housing market. A lot of people, you get conflicting things on the news about foreclosures or prices going up in California.
Right.
Overall, you guys are focusing on the whole nation and several key areas that you guys have honed in on. What is the state of the housing market?
Well, we're without a doubt in a seller's market now. I think we've pretty much confirmed that. Here we are, mid 2013, where we're seeing multiple offers on almost any property that's being listed. We're seeing record low amount of inventory in all the markets we're in. Just real quickly, most of the areas we stick to are Phoenix, Arizona, parts of Texas, Atlanta, Georgia, Florida, Indianapolis, Indiana. All the, we like state capitals, we like thriving job markets, we like obviously affordable areas. But we've got our teams in each area are kind of all reporting the same thing, that they're having trouble finding inventory, which is so strange. It is like the dramatically opposite, counter opposite problem we had a year or two ago, where there was plenty of foreclosures, months and months of inventory just sitting out there, and so few buyers who were confident. And now they said, I read, from NAR, National Association of Realtors, said that about 75% of real estate investors have plans on buying property this year. And we're seeing not just local investors, we're seeing international investors come out of the woodwork, buying properties like crazy, and mainly in cash. So it's really kind of just taken a lot of the inventory away. Notices of default are down. So I'm noticing a healthier economy this year. I think anywhere you look in the media and any real estate magazine or forum you look at is going to say positive things about the housing market. So
what about the rental side of it? I noticed a few weeks ago I purchased a property in Texas, put the for rent sign up. Within 7 days it had rented out. I had been forecasting and looking for a rental boom, just because of the changes in demographics and in the economy. Is that something typical, or is that just a Texas thing?
It's geographically localized for the most part. Depends on which market you're looking at. Texas, for example, has very low unemployment, which is why we love it. Austin and San Antonio, Texas, these areas have, I think, below 5% unemployment. So it's easy to rent a property out. When you're looking for a tenant, if people are moving out there like crazy because there's jobs there, it's going to be easier to keep your property rented. Yeah. Go to an area with higher than national average unemployment, you might have a little bit more trouble getting your property rented. And really, when it comes to the unemployment rate, it's a pretty strong indicator of how strong the rental market will be. So that's one of the main factors we look at.
How about when interest rates rise? A lot of people, obviously it's going to be inevitable now because
it's already started happening.
Yeah. What is the result? A lot of people are concerned that there's going to be another crash because of rates rising.
Right. Well, I like to, before I come to a conclusion, I talk to everybody I can, lenders, property managers, real estate agents and brokers all over. I like to get a real, collective point of view on the subject. And actually what I've really started seeing, especially talking to a lot of lenders, is that when you have high interest rates going up, you start to have more people on the secondary mortgage market, more investors, individual and institutional investors, coming in and buying these notes, in the secondary mortgage market, which means more investors are seeing the opportunity to make a slightly higher interest rate on borrowing their money, on lending their money, which opens up more loan programs for borrowers. So as interest rates start to climb a little bit, which really should only be happening if our employment rate is strong. And right now, we're not at where we want to be. Obviously, the Fed has made it clear that we still have some room to go for improving the unemployment rate. But as long as they don't jump up too much, you're going to start to see probably more loan programs coming available. And I'm starting to hear things in the woodwork. Nothing confirmed yet, but I've heard a few things about some lenders starting to come out with like a 85% loan to value loan program for investors, and just things in the grapevine from lenders about more stated income for business owners. So I noticed that you start to see more options for borrowers, but obviously it can't jump up too much, otherwise we will hit another bubble if rates jump up too much, because our unemployment is not strong enough yet.
How about the areas you guys are focusing on? If you don't mind sharing what specific areas you guys have and why those areas, what makes those areas,
Absolutely.
what makes an area better than an area you're not in?
Tremendous amount of methodical work that goes on, for us to find the markets we're in. In order to select a market for us and for our investors, a number of things have to happen. Right now, we're pretty good. We're not really looking to jump into other markets. But when we do identify a market, one of the main things that we look at is not just the area, because it's pretty easy to research a particular market. You can jump online and you can get all kinds of information you need from census bureaus and from all kinds of real estate consulting firms online without even spending any money. But it's the people that really require that really run the whole machine. Mm-hmm. When we find a particular market where we realize, well, we can definitely get a good rate of return here. It's a strong employment, center with this great, low unemployment, jobs moving in, population growing, strong rental market, and all these things we can do from out here out of state. But finding the people, there's really the most amount of work that goes into that. In addition, you've got anybody can run a background check, a credit check, criminal check. That's all really easy to do. Yeah. But it's really getting to know the person and deciding if you would be comfortable investing with that group. And that's one of the things that we always look at here. We have the investor first type of model, where really before we start working with a group, we think, would I let my mother, would I let my roommate, my best friend, or my brother buy from this group? Do I feel comfortable enough yet? And sometimes it takes some time in order to actually figure out if you feel comfortable working with a particular group. What we like to do is get a lot of references from other investors. So most of the teams that we work with in these markets, at one point or another, we've been working with many of them for 5 to 10 years, but at one point or another, an investor that we knew had found them on their own or found them through a coworker or friend and started using their property management services and had good things to say.
How long have you, what's like the oldest relationship you have, and how long is the newest relationship you have?
Well, in Florida and Texas, there are areas we're working with the same property manager and broker since the 90s. So about 15 years or so, I'd say. And it's just all about the relationship. When you're buying property out of state, you really have to have that relationship where that if you call a property manager, they're going to call you right back, or they're going to be available. And follow up is everything. While we're working out here or we're having fun with our friends and family, we've got to trust that there's phenomenal property management taking place. Yeah. So when we have a track record going, and when we've done years and years of business with a particular property manager, we know what to expect, and the expectations are already set. That's the main thing.
Just out of curiosity, how many investors actually go look at these properties?
We figured that there's somewhere between probably about 10 and 15%
actually go to the
that go to the area, that fly out, that travel out there and look at the area. And we always recommend people to do it. It's definitely something that's nice. You get to see the area, you get to meet the team. It's definitely not necessary though. And a lot of people say, how on earth can you buy a property that you've never seen before? And it's easy to think that, one day you're living your life normally, and the next day there you are signing a contract. And I think that's the misconception that people have. They don't understand the time frame in between that desire and then actually signing the contract. Yeah. And it ranges for different people. Some people are now buying their 7th and 8th property, and they know exactly how to do their due diligence. They've got it down to a science, and they can look at a market and end up picking their property within a few days. Because they know their criteria, they've defined their criteria very well. When you're a new investor, you don't really have your criteria. You don't really know what to look for yet. And that's really what we help people do. We help people define their criteria. But we can't do that without getting to know them well. So, the Marshall Reddick Real Estate Network prides ourselves on really getting to know each investor, asking the right questions, understanding what their objectives are and their goals, when they want to look at retiring, are they looking for high cash flow? Are they looking for an appreciating market? Everybody's a little different. We always say that the real estate investing is not one size fits all. Everybody's got a different risk tolerance and what they're looking for. So through the questions that we ask, much like a financial advisor would when they're talking to their investor, we try and figure out what strategy works for each person. So the nice thing is that we've got property all over the country in every type of category you could ask for, the highest cash flow markets to the highest appreciating markets. And really, it comes down to you, the investor, and you're going to be partial to certain markets and certain types of property based on your strategy.
Everybody's got this idea that is not a landlord, that you're going to get some late night phone call. Even though personally I've been a landlord for 13 years, I've never received a call like that. And I can actually tell you that I spend probably 30 seconds or less on each property a month.
Same here.
Because it's direct deposit nowadays.
Right.
Most of the property manager does everything. What are some problems, though, that people can anticipate and plan for and put in the budget?
It's a great question, actually. What we like to do is help people plan for those maintenance issues or that vacancy ahead of time. So when somebody looks at a property and runs the numbers, a novice investor is going to usually they're going to make a big mistake, and they're going to factor in their mortgage payments and their taxes and their insurance, and if there's any HOA, property management, and they're going to say, great, my cash flow is, I'm left with $200 a month, not factoring in any potential maintenance and vacancy. And of course, it's not if you're going to have maintenance and vacancy, it's just a matter of when. You could have one tenant in a property for 6 years and have very little maintenance, but by the time they move out, you've got to replace almost everything. You may have a couple $1,000s worth of carpet, paint, flooring, Mm-hmm. So it's hard to determine exactly when you're going to have maintenance issues or when you're going to have a vacancy. So what we do is in our cash flow sheets, we're very conservative. Now in the markets we're in, it's very, very rare to have higher than an 8% vacancy rate, and that's because we target that's the annual rent. That's because we target single-family properties, single-family homes. And the reason that we target single-family homes is when you look at condos and townhomes, you tend to have more turnover, usually higher vacancy, and you have higher HOAs too. Anytime that we're presented with a condo opportunity, I look at it and go, yeah, the price is low, but when you factor in the $200 a month HOA, it just totally wipes out the cash flow. So the problems that you'll have, as long as you're working with the right property manager, and that's key. That could be probably the worst mistake that some people make, is that they hire the wrong property manager. And then they find out, there's a vacancy, and my tenants have been out of the property for 30 days. Yeah. I mean, you need a property manager that anticipates any issues. That takes the initiative and tells you, hey, I talked to the tenants, the lease is up at the end of the month, and they'd like to extend it. Rather than, as an investor, just getting that second lease once they've re-signed it, and you said, okay, didn't even know that they were thinking about staying in the property. You've got to know about things ahead of time. And a good property manager is going to communicate with you. Another thing I'm very, very opinionative about property management. It's like a near and dear subject to me. And as an investor, I've owned property for many years. I've talked to thousands of investors, and I understand how essential property management is, and that's something that we take so seriously here. But for the property managers that we select, communication is everything, and we've trained each one of them to understand that if they have a landlord who has a vacant property, they need to call that landlord every single week, once a week. If it's a Monday or a Wednesday, whatever day, it doesn't matter, just once a week, updating them on how many calls they've got, how many showings the property had, if they took any applications, and it could be a 5-minute phone call, it could be a 3 or 4 sentence email, just a little bit of communication. But the biggest problems that I've seen happen are usually when there's poor communication between the property manager and the investor, or that there's poor planning on the investor's part. Perhaps they didn't understand they had to factor in maintenance and vacancy. In maintenance, we also factor in 8%. Yeah. So a single-family home, it's the same thing. You're not going to have as much turnover, and you really shouldn't have to be replacing things as often, especially if you pick a newer property. And a lot of the properties that we sell to our investors are 10, 15, 20 years old. So a lot of times, and even those properties have been updated. Yeah. So there's usually very little cosmetic stuff that needs to take place, but just as you're factoring it ahead of time, otherwise you're going to be hit with a little bit of a surprise.
Now we're sitting here in beautiful Southern California, and you guys are not associated with any realtors in Southern California. Why not?
And you know what, people, it's the question we always get. I've been doing this for 8 years, and it's just, as soon as I came on, I thought the same thing. Why aren't we selling properties here locally? It'd certainly be a lot easier. Yeah. And sometimes late at night I wish that we did, because it's difficult to manage all these markets out of state. It's fun, but it's challenging at times. So the reason is real estate investing is an investment. It's completely different than buying a primary residence. And I've I was born in Northern California, and I'll probably stay in California for most of my life. I love it here. But when you're investing in real estate, you have to treat it as an investment. You got to treat it as a business, and the numbers have to make sense. Just locally here in Orange County and really all of Southern California, I can still rent a property for a lot less than I can own. And there's really only about 10% of the markets in the entire country right now that it's cheaper to rent than it is to own. So about 90% of the country, you can own a property for less. And that's because, of course, low interest rates, low prices. But Orange County and San Francisco, and you got Manhattan and these really high-priced markets, it's very difficult to find affordable property. So I realized that I can rent here for less, and with the same amount of savings that I have, I could buy about 4 or 5 properties in different markets with the same down payment as I would have to put on one property here in California. So then the pricing is such a large factor in it. Mm-hmm. Not only that, but when you're buying property out of state, the price versus the rent is a lot closer. You have a much higher percentage of margin when you're buying a property out of state for, let's say, $100,000, and you can rent that property for sometimes $1,000, which is right at about 1% of your purchase price. That is a factor we look at. It's difficult to do in most markets today, but if you're in the high cash flow markets, you can actually rent a property for more than 1% of the purchase price. Why is that important? Well, calculate it out, look at the numbers, and you're going to see a very high rate of return. It's not uncommon for us to be able to get 15% or more of a yearly annual return for our investors, completely net after all expenses.
Yeah.
15% or more on real estate. And that's after factoring in maintenance and vacancy. So when you look at that high of a return, and you look at properties here locally in California, I mean, you've got to put sometimes close to $100,000 into a property and just to maybe break even if you're lucky.
Yeah.
Another factor that most people don't understand, I mean, people can live here their whole life and have no idea about the eviction or the rent laws here in California. And if you look at the eviction laws, it's very, very pro-tenant. Everything kind of favors the tenant if there's late rents, if you have to do an eviction. I've talked to countless investors that have said it's taken them almost 6 months to get a non-paying tenant out. Meanwhile, you're paying an extremely high mortgage every month, and that can totally destroy your.
That's a really good point. I never thought about that, but I have experienced evicting somebody in California and out of state. In California, it took over a month and a half. Mm-hmm. Luckily, the people just left. Out of state, it was immediate.
Well, I mean, take like Arizona or Texas, for example. Most of this, actually, they're all Georgia, Tennessee, Florida, Missouri. These are all landlord-friendly states. And what does that mean? Like I said, eviction laws, rent restrictions. You've got these laws that really favor the landlord. So if you go through, like, I'll give you an example. In Arizona, if I have a tenant that doesn't make their rent payment by the 4th, then my property manager adds on a late fee. Now the rent plus usually about 10% of the rent is due by the 10th of the month.
Yeah.
If that tenant doesn't pay that rent plus the late fee, it goes to the attorney in my property management company, which is another reason why I like having property managers. They have attorney on retainer that I don't have to worry about. They'll send them a letter, usually just a boilerplate letter, that basically says pay or vacate, pay or we're going to start the eviction process. So if they don't pay the rent plus late fee within 48 hours, the eviction process starts. Well, in Arizona, it takes about 2 days to get a court hearing on an eviction. In California, it can take at least 3 weeks just to get a court hearing. And then you've got to go through that long process of waiting for your date. In Arizona, if they don't make that payment by the time that letter goes out, the eviction process starts. We can get a hearing. We can get that whole process done. Court, marshal, sheriff comes to the property before the end of the month, and they're literally out of the property within less than 30 days.
Yeah.
So it's just a much quicker process, and it favors the landlord. So as an investor, you have to look at it as a business. These are reasons why you want to own property in areas where it makes financial sense, logical sense, demographic. You've got Austin, Texas, 4.7% unemployment. Orange County, we don't see that high of that low of unemployment. So jobs and companies are moving there, and it's not necessarily where I see myself living, but if I'm going to own real estate, I want to own it in a market that's emerging, and I definitely think that the markets we're in, they make more sense.
In closing, Scott, if someone would like to get a hold of you guys and either go to one of your seminars Or what if they're not California? Like they could still connect
Right.
with you guys and purchase property. What's the best place? What's the best thing for them to do?
Well, we're finding probably about 70% of our new investors online these days. So if you're on the website, we have a ton of recorded presentations. The website is www.mrren.com, which stands for Marshall Reddick Real Estate Network. So on the website, under Education, we have a tab that says Recorded Presentations. You can watch anything from how to analyze real estate investment, fundamentals of property management, how to self-direct your retirement account and buy real estate with your IRA or 401k. So there's a tremendous amount of education. So we find a lot of people just on our website. If somebody wants to contact us, they can jump on our website. They can sign up for a webinar. We've got a lot of webinars on there that people can watch. They can call us too. That's a great way. Just give us a call, talk to a real estate advisor. If you call our main line, a trained, experienced real estate advisor, the ones you actually know personally, will answer the phone. And these are people who own real estate. They have a real estate license. We're really big on working with people that have the experience and not just hiring somebody off the street. And if you talk to the staff here, you'll notice that almost all of them own real estate.
Yeah.
So it's a fun environment to work in. But our main line, which I'll give you, is 949-885-5186. 949-885-5186. It's been the same number for, probably 15 years now. Call us and you'll be able to talk to a real estate advisor. They can answer some questions for you. Go on our website. You can join our email list right there on our homepage. And we send out emails that are high education. We've got a blog. The URL is blog.mrren.com, blog.mrren.com. And on the blog, every week we submit a new article. There's phenomenal information on there, how to set your real estate criteria. So you can get almost all the information that we give out on our blog. I mean, we really just put out a ton of content on there.
Great.
So those are just some great ways to get a hold of us. And if you're here in Southern California, we do live meetings every single month from San Diego all the way up to San Francisco, in fact. So on our website is the whole calendar of events. Every single month we're doing educational topics, and we're really big on providing free education. That's how I got started. That's kind of how Marshall got started, and we've always been able to maintain an opportunity for people to learn without having to invest thousands of dollars into education.
Yeah.
And our goal is to help those people with their savings to put it into real estate.
Yeah.
Rather than, it breaks our heart when we see people spending $20,000, $40,000, $50,000 on education and they're still not sure what to do next.
Yeah.
So here you can get all the information you need for free, and when you're ready, you're able to spend your hard-earned money on an income-producing asset like real estate.
So true. Scott, thank you so much for joining us.
You're welcome. Thank you, Dan.